In 2018, the consensus was unanimous. The hard drive was finished. Solid state had taken the laptop, the desktop, the phone. Shipments collapsed. The whole industry shrank to 3 surviving vendors, written off by every analyst in the room. Then by April of 2026, 4 of the most boring stocks in tech had gone vertical. Western Digital more than doubled on the year. SanDisk more than tripled. Seagate up over 80% and printing the highest gross margins in company history. Micron sold out of high bandwidth memory through the entire year. The broader market was flat. These 4 were on a different planet. The technology Wall Street buried in 2018 quietly became one of the highest margin businesses in tech. This video is about why, how it became an AI story, and when the trade breaks. The death narrative was real. Notebook drive shipments were dropping every quarter. By 2020, total hard drive units were down to about 260 million, a 14% yearly decline. But something quieter was happening underneath. Per drive capacity was growing faster than units were falling. In 2018, the world shipped about 869 exabytes of hard drive storage. By 2020, that number had climbed past 1,000 exabytes. The drives got way bigger. And then the technology everyone had been promising for 15 years finally arrived. It's called HAMR recording. Heat-assisted magnetic recording. A laser inside the drive heats a single spot on the platter to over 400 degrees Celsius for around a nanosecond. The metal briefly loses its magnetic stability. The write head flips a much tinier bit. The metal cools and locks. Drives that used to top out around 26 terabytes can now hold 44. Seagate is now shipping 44 terabyte HAMR drives in volume to 2 hyperscale customers, and those hyperscalers signed multi-year purchase agreements. One of the largest signed a contract covering all of 2027. That has never happened before. Hard drives used to trade like a commodity, on quarterly orders. Now they trade like a strategic resource, and the 3 surviving vendors control over 95% of the market. None of that explains why hyperscalers are signing 7-year contracts for spinning disk. To understand that, you have to follow the data. A single frontier AI model is, at the end of training, a giant file of numbers, maybe a trillion of them. To make that file, somebody had to feed the model petabytes of text, images, and video. And every byte of that data has to live somewhere physical. Take a frontier language model, something like the GPT 5.5 class. Models at that scale are reportedly trained on tens of trillions of tokens of text. The total stock of high-quality public text on the internet, even counting multiple training passes over the same data, is estimated at around 300 trillion tokens. At current growth rates, frontier teams are projected to consume that ceiling sometime in the next decade, which is why the next axis of scaling is multimodal. Video, images, audio, those corpora are running into hundreds of petabytes per training run. None of that lives in memory. None of it fits on a laptop. It sits on object storage, mostly hard drive backed, in racks that span an entire warehouse. That's the cold tier. Step 1 of the journey. When the training run actually starts, the data moves. Specific shards get pulled from the cold tier into a hot tier of solid-state drives bolted directly to the GPU servers. This is where the speed matters. Thousands of GPU accelerators burning through tokens cannot wait on slow storage. So you pay for fast flash here, even though it costs 5 to 10 times more per terabyte than disk. Then there's the checkpoint problem. A trillion parameter model carries around 24 terabytes of live state during training. Weights, optimizer values, activations. If a single GPU node crashes after 3 weeks of compute, you don't want to start over. So the system writes a full snapshot to fast storage every few minutes and then drains it to durable storage in the background. The rule of thumb is 3 to 5 times the model size in active checkpoint storage per concurrent run. For frontier scale, that's tens of terabytes, written over and over. Training ends. The model gets deployed. And here's the part nobody talks about. The data doesn't disappear. The original corpus stays. Every old checkpoint stays in case the team wants to retrain a smaller version or audit a behavior or distill a student model later. Every gradient log, every evaluation run, every intermediate weight snapshot. All of it goes to nearline hard drives and stays there indefinitely. And then inference begins. Every prompt and every response from production traffic gets logged for safety, for fine-tuning, for regulatory audit. That stream never stops. Retrieval augmented generation systems carry their own corpora. IBM demonstrated a single server holding 100 billion vectors, and enterprise retrieval setups regularly hit petabyte scale. Now multiply this whole pattern by hundreds of concurrent training runs at 5 hyperscalers, plus billions of daily queries. That is why a 44 terabyte drive ships out of a TI factory every few seconds. There's a second force pushing this whole rally, and it has nothing to do with hard drives. It's a single line buried in Micron's earnings call. Every bit of high bandwidth memory consumes 3 bits worth of standard memory wafer capacity, 3 to 1. Because high bandwidth memory is built by stacking 8 or 12 memory dies vertically with through-silicon vias and an interposer, the yield loss compounds. So every time NVIDIA asks for more HBM supply, the world makes less of everything else. In October 2025, Samsung and SK Hynix signed letters of intent to supply OpenAI with 900,000 memory wafers a month. That single contract is a meaningful slice of global memory production. Hynix pulled wafers off NAND. Samsung scaled HBM capacity by nearly 50%. The downstream effect was brutal. Standard memory contract prices roughly doubled in a matter of months. Phones and personal computers are forecast to ship more than 10% fewer units in 2026. They literally can't afford the memory. Here's the catch. When flash gets that expensive, hyperscalers stop trying to use it for warm data. They push that workload back onto hard drives where it always belonged on a cost basis. Nearline hard drive demand surges. Seagate hits its highest gross margin in company history. The supply chain for one specialized chip cascaded all the way down to a 44 terabyte spinning platter, and the flash makers themselves became the most explosive stories on the market. SanDisk separated from Western Digital at the start of 2025 as a pure-play NAND business. Then AI servers came to make up close to half of its enterprise drive shipments. Data center revenue surged well over 70% year over year. Enterprise solid-state contract prices climbed over 30% in early 2026. Micron locked in its entire 2026 high-bandwidth memory production under binding contracts before the year even started. The boring memory business became the highest margin chip line in the company's history. Now the honest part, every supercycle eventually ends. The bear case here is real, and any framework that ignores it is selling you something. 3 things break this thesis. First, supply expansion. Kioxia, Samsung, and SK Hynix are all bringing new memory capacity online by 2027. If AI demand growth flattens before that capacity arrives, NAND repeats the 2018 to 2022 crash. Second, hyperscaler capex. Goldman Sachs estimated this trade requires more than $1 trillion of annual AI profit to justify, against 2026 consensus of about $450 billion. The math is wide open. Third, the long arc of flash. The cost per gigabyte for solid state still trends down over time. Nearline disk runs about $15 per terabyte. Enterprise flash, depending on tier, runs anywhere from 100 to several hundred. That gap actually widened to 16 to 1 in early 2026. But if NAND oversupply ever does land, that crossover for warm tier moves forward, and hard drives lose ground. So when does this all hold together? When AI data growth keeps outpacing the supply curve. Multimodal training, video, agent traffic, inference logging, retrieval corpora, all of it has to keep growing faster than memory makers can add fabs. That's the actual question behind every one of those 4 companies. Not whether storage matters to AI, it clearly does. The question is whether the demand curve stays ahead of the supply add curve. Watch that, and you'll know which one of these you're in.